Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for January the 18th. Before I jump into the content for this video, please do me a huge favor, hit the thumbs up button. Also, don't forget to subscribe to the channel, and don't forget to click that bell icon to get notifications when I release new updates. So the first thing I'm going to talk about, we're going to talk about Bitcoin, then we're going to talk about some altcoins, and then I'm going to give you guys a trading lesson that should help you going forward, because a lot of people are looking at these altcoins that are popping going, oh my god, how could I have caught this move? Truth be told, it was actually very easy to catch those moves. I didn't catch them because I'm so hardcore bear that I let my bearish bias get in the way. I kept worrying that if, even though the setup looked good on altcoins, Bitcoin might dump, and if it did, it would ruin the altcoin setup. So I went too conservative, too cautious. I should have took small positions on those setups, and I could have made a lot of money. So I'm going to teach you guys how to do that so that in the future you don't make the same mistake. Let's start off talking about Bitcoin today, because there's a lot of on the bearish side, there's obviously a lot of anxiety right now, worrying, oh my God, is the bottom in? Is this the next bull run? And on the bull side, there's a lot of euphoria, thinking the bottom is in, and a lot of I told you so going on, and all that kind of stuff. So I'm seeing bearish divergence on the 12-hour chart. If I look at this pump is going up, up, up. It's in this rising wedge formation, right? Rising wedges tend to break south. They're a bearish signal. You basically measure the height of the wedge from the start over here to the bottom, and that gives us a breakdown target of roughly 800 bucks or so. And the reality is we don't know where it's going to break out at, but I suspect if it is going to dump, it's going to dump after the CME opens. So that would be sometime around here tomorrow. Okay, we have confirmed bearish divergence. Okay, on the 12-hour, we have price. Let's put it on a line chart. It's a little easier to see. We have price making a series of higher highs, whereas RSI is making a series of lower highs. And it's not just any divergence, it's triple bearish divergence. We had a high here, we had a lower high, and another lower high. We had a high, higher high, and higher high. So we now have triple bearish divergence, and like I said, it is indeed confirmed, because this red candle closed this morning at 6 a.m. my time, about 4 hours ago. So I'm definitely thinking this thing is probably topping out around this point. Doesn't mean it can't go up more. No, it could definitely throw up another squeeze, right? It could squeeze up to 9,000 or 9,200 even, right? Squeeze some people out. But I'm in short positions now. I'm happy with those short positions. I have my stop losses set, and either I will make a lot of money when this thing puts in a new lower low, or I will make a lot of money when this thing retraces back down and puts in a higher low, right? Or I'm wrong. It shoots up, skyrockets, and stops me out, and stomps my dreams, right? But yeah, this is what I'm seeing on the 12-hour chart. So let me get rid of this stuff so it's a little easier to see. By the way, if you're bullish and you want to be bullish, this has a breakdown target of around 8 grand. So it certainly could pull back to that level and then keep moving north from there. I don't think that's implausible at all. I don't think it's a likely scenario, but it's definitely possible. If you're measuring this little local move here, this first one, right? This came down to the 61.8. This little next one here came down to the 0.5. That's often a trend continuation. And this one hasn't done anything yet, right? So the 0.618 on this one is right around 8,100. The 0.786 right around 8 grand, right? Maybe, right? Let's squish that up some. And actually, I'm going to jump to a different chart. This is a 4-hour chart. I was watching this triangle that was forming up on the RSI. It broke south of it last night just before I went to bed. I did not stay up and watch it, which was, I was kind of afraid it was going to do this. It moved down to about 8,800, found support, but I was sleeping. And it looks like, it's really hard to tell, but it looks like it's coming up for a bearish retest here. If we zoom in on the RSI, it's a little cleaner. See this? So you had this very clean line. This was that 4-hour line that I talked about in the last 2 days worth of videos, right? Kept saying it kept finding support on it, finding support. Well, it broke south. It came back up. So far, this looks like a bearish retest, okay? Which is basically just meant to shake bears out before I move down. The other thing, if you notice about this, as price is moving up, we have a divergence on volume. We have volume actually well, I'm not sure what's up with TradingView lately. It seems like I just can't seem to get it to do what I want it to do half the time. But anyway, we have volume moving down, right, where price is moving up. So that's a sign of weakness in the market. It's often a sign that a dump is, looming, so to speak. So I feel pretty good about the short position. But like I said, I got stop losses. Risk management's in the name of the game. I certainly could be wrong, and if so, it'll stop me out. Okay? No big deal. By the way, quick tip on stop losses. If you really want to trade for a living, one of the lessons I took away from poker, there was a saying in poker, scared money is dead money. And basically what that meant was if you were playing above your limits, or if you were playing at tables where, people were betting larger amounts than you were comfortable with, if you're risking more than your bankroll than you should, you would end up making mistakes because you were scared of making a mistake, right? So it would make you screw up, right? I remember when I was a kid, I used to play a lot of sports, and when I would go bowling, oftentimes my dad would say, you're so afraid of throwing it in the gutter that you're aiming for the gutter accidentally. Kind of the same thing with trading and poker and all that kind of stuff. If you're worried about losing, it'll make you make mistakes. So one thing you can do is don't think about your losses in terms of dollars. Think about your losses in terms of percents. So let's say that, for example, we're going to use easy math. Let's say that you have $1,000 trade fund, right? And you take a 5% loss. Well, that's $50, right? And depending on where you are, $50 might be a big deal. I don't know this $50, right? It's not fun for me either. But let's say that losing $50 is a big deal to you. Well, instead of thinking about $50, think, okay, I lost 5%, right? Oh, that doesn't sound so bad, right? And you might be kind of chuckling like, oh, $50. But listen, it matters. Like if you get up to the point, let's say you're doing $100,000. Let's say you got a $100,000 trade fund and you're doing $100,000 trades, right? You lose 5%, it's $5,000. But if you say 5%, it's like, okay, I lost 5%. I can make 5% back. I can do that, no problem. But then you start talking about $5,000 and it gets in your head. So just, think in percents. Basically, whenever you put money into your trade fund, take that out of your budget. Okay, this is kind of a trading tip for people that are trading for a living, but take it out of your budget. When you're doing your budget each month, saying, okay, I have X amount of dollars in the bank, I have X amount of dollars here, X amount of dollars here. Don't count your trade fund. That's your tools. It's like a carpenter's hammer, right? A carpenter, when he does his budget, he doesn't say, okay, my hammer's worth $3, or my hammer's worth $50, and my saw is worth $100, right? No, he just says those are my tools. Your trade fund is your tool, right? You got to think of it that way. You got to think of it as your tool. And again, that's something that I learned when I was playing poker for a living back before online poker became illegal in the United States. So that's kind of what I'm seeing on the 4 hour. That's what I'm seeing on the 12 hour. If we look at, what is this? This is a 4 hour, another 4 hour. No, I don't want that. 3-day chart, it's not making my bear heart happy. In fact, honestly, it's a little bit frustrating. It's not doing what I want it to do. It's basically not flipping back down up here, which is what I wanted it to, kind of like it did back here. So that's a bit of a problem for me. I don't know what it means, but it's certainly not as perfect as what I would like to see on this fractal. Okay, so I'm going to continue watching that and just wait. We're still in the same ballpark, right? I haven't changed my stance on the fractals. We still have the same number of bars and all that kind of stuff, right? From this May pump to this July pump, 27 bars. From this October pump to our current high, it's 28 bars now instead of 27. If we look at, from the top to the pump in July, it was 221 days or 74 bars. If we look at the top from June to where we are now, it was 206 days or 69 bars. So still think this is the July pump, right, which I did a whole article on TradingView about, so you can read about that if you'd like to. But I don't like this. I wanted it to turn down more. But, with all fairness, there's 8 hours left in this candle, so maybe it will turn down before the candle closes. Okay, we do have that divergence on the 12 hour, so we'll have to wait and see. If we take a look at a weekly chart, I didn't talk about the similarities in the weekly chart in the MACD, but I did want to point this out because people are using MACD as a reason to get super bullish. Listen, this thing is getting ready to have a bullish cross where this fast signal crosses the slower signal. It's tough to see, right, with the histogram on. So I'm going to turn the histogram off. But see how it's getting ready to cross over the blue? We don't know if it's going to yet or not, but it looks like it's going to. But if you go back to July, that July pump that I keep talking about, look at this, did the exact same thing, right? Had its crossover, move sideways, and then still ended up dumping. So it's just one more similarity to that fractal, okay? I'm going to go ahead and take that off so it's not mushing up the chart. On the weekly, we've yet to put in a higher high, so we're still in a downtrend structure. We're still in a bearish market until this high is broken on the weekly chart. And right now, the RSI has failed to break out of this bear market box. So if it dumps from here, it's going to end up looking something like this area back here, and it will all be like, oh man, why wasn't I shorting that with 10x leverage? It's always easy in hindsight to be like, oh, I should have done this or I should have done that. But remember how you're feeling right now. Remember this exact moment, because there's going to be another moment like this in the future where you're thinking to yourself, you should do this or you should do that. And your emotions and your anxiety are going to hold you back. And then down the road, you're going to be like, oh, I knew I should have done this. You have to control the emotional side. Trust me, it wasn't the easiest thing in the world to open that short last night. I do have some anxiety. I do have some concern that maybe this is not what I think it is, and that this is getting ready to completely, go against me. But that's what risk management is for. Okay, if I'm wrong, I'm going to lose a small percentage of my portfolio. It's fine. You're going to lose sometimes. You have to get used to this idea that you're going to lose. It reminds me when I was doing sales for a living, I was a shy kid and I got very lucky, had a really great mentor in sales, and I was about 19 years old when he was training me, and he told me, we were doing these traveling sales where we went to these Walmart stores, and basically we would set up these tent sales outside the store, and I had to approach these people who were just there to try to do some shopping. They didn't want to talk to me about anything. I was selling cell phones. This is back when cell phones were first becoming digital from analog, right? So people were just getting like the old Nokia phones and stuff. And, I would wait for people to come to me, and he's like, you're never going to make it in this job, right? You got to approach people. And I'm like, yeah, but I don't want to bother him. He's like, listen, the more no's you get, the more yeses you get, right? So that was the whole thing, was like, I got trained for every 10 no's, for every 10 people that said no to me, one was going to say yes. So then, no's didn't become a problem because I got excited. It was like the more people I talked to, the more sales I was going to make. It ended up becoming very successful in sales for about 10, 15 years. Because of what that guy taught me. Trading's the same way, right? Take the trades. Okay, this is something that I've done very poorly the last couple of months because of my bearish bias. You got to take the trades. It's okay to lose, right? As long as you're taking trades and using proper risk management, using proper setups, you should win more than you lose. Winning meaning you're going to win a larger percentage of the time than you're going to lose, right? And if you're using proper risk management, even if you're wrong half the time, you'll still come out ahead on the financial side. Okay. So that's the weekly chart. That's what I'm looking at. It still looks very, very similar to 2018. Same old spiel, okay? I don't really feel like we need to regurgitate the same stuff I've been talking about for a couple days. You can go watch the last couple videos if you missed those for some reasons, and you can see all these similarities that I'm talking about. But for right now, what I'm watching is I'm watching that rising wedge. I'm watching that divergence. And this is actually the trend line that I'm going off of from back on January 2nd. This is from the low at $6,800. You can see it's got 3 nice touch points. So I would be watching for this thing to break. It's, if it gets hit up around 86 to 8,700 and it holds, we could be going higher. Okay. If it fails, I think we'll probably pull back, and I suspect it will pull back more than that rising wedge's target, but we'll just have to wait and see what things look like. Okay. On the bullish scenario. Okay. First of all, holy cow. You see this? When you put this on a daily chart, that's not sustainable. That's another one of these hockey stick patterns that Bitcoin loves to put in, right? The shakeout bears. It's been putting those in since the summer, in 2019. It just put these in time and time again. I know because I got caught on the wrong side of them a couple times. It was pretty rough. Didn't get caught on this one, thankfully. But if we measure this whole move from the bottom to the top right here, down around 73 to 7,400 bucks is that golden retrace. And the thing is that's that old level of support too. So if it goes down there and finds support, I'd say that this is probably the bottom. Okay. If it fails and goes through it, then this was just one big fake out. But on the bull side, if you look at this with the trend extension, if we take this whole thing as a trend, right, which is what we did, right? Last week we were saying, okay, 8,100 is our target. Maybe it gets up to 8,400 and test the CME 200-day moving average. And I said if it really gets, some legs, it might go all the way up to the 1.618 and test the 200-day moving average, right? Which is basically what it's done. It's just sitting right underneath the 200-day moving average. But if this gets, if it keeps moving and people get excited and it breaks above that 200 moving average, that's going to be rough. That's going to be rough to call, right? Maybe it just goes up to this 2 level, 93, 9,400, fakes some people out and goes back down. But it's not normally in Bitcoin's tendency to go back below that 200 after it breaks above it. This was a weird deal. And this is one of the reasons that I went ahead and did close my trades back on this pump, is because it broke above the 200. And I thought, oh, shit, this thing is getting ready to just take off, right? Breaking above the 200 was very, very bullish. But it was a big fake out. But normally it's not. Normally in Bitcoin's history, when it breaks above the 200, you're getting ready to have some major upside. You can see it right here. It broke above it, and if you waited for it to go back underneath it, you never got in. And back here, When it broke above it, yes, it came back below it. But, I mean, look at this. When it broke above it broke above it right around seven, maybe $8,000, and it pumped all the way up to almost $12,000. So even though this was a bearish rally that eventually retraced and went lower, still it was a 50% pump once it broke above the 200 moving average. That's not a trade that I want to miss. Okay, if we go back in history, you can see how beautiful this 200 moving average is. It just rides on top of it in bull markets. Okay, we don't have enough history on this chart. Okay, well, let's go to look at a BLX chart real quick. Well, you know what? Take my word for it. I've talked about that in past videos, and you guys understand what I'm saying, right? When it breaks above the 200, it's super bullish. So if it breaks above that, it's going to be tough, right? It's going to be tough. You know, do we take the trade? Do we go long with the risk that it's a fake out, or do we wait, hope it pulls back, and possibly miss an entry? I'll have to cross that bridge when I come to it. Okay. Speaking of the BLX, guys, I can't stress this enough. We're in downtrends. We're in a downtrend on the weekly. We're in a downtrend on the monthly. This idea that people have that because it's higher now than it was at the beginning of the year or beginning of last year, that means it's an uptrend. That is not how uptrends work. Okay, just because the price is higher doesn't mean it's in an uptrend. If that were the case, that means the stock market has never had a downtrend. Okay, let me show you what I'm talking about. All right, so this is stocks. I'm just going to take a look at the S&P 500. Okay. S&P 500. We're going to put this on a monthly. Oh, gee, look, it's always been higher than it started at. That must mean it's never had a downtrend. It's never had a bear market. Bullshit. Bullshit. It hasn't had a bear market. Of course it's had bear markets. Look at this. It dropped from almost 1,600 all the way down to under 700. Lost half its freaking value. No one was saying, trust me, guys, no one was saying, oh, we're still in a bull market right here. No one. But then people come to crypto and they're like, oh, well, we're higher than we started at. If you look at 10 years, we're much higher. It has to be an uptrend. It's a macro uptrend. No, it's not. We're in a downtrend. Don't be stupid. Okay? Downtrends are very easy to spot. They put in lower highs and lower lows. What do we have? This is a freaking monthly chart. We have low, high. Great. That was an uptrend, right? Not really, because look at this. But at least you could say it was an uptrend. Right here you could say it was an uptrend because you had a low, you had a high, it was higher than this. You had a higher low, it was higher than this. Okay, so it looked like an uptrend, and then poof, lower high, lower low, downtrend. Now this right here, so far it's a lower high. Will it go up and be a higher high? Maybe. And if so, this could be a trend reversal, this could be the bottom, and we could be going up. But that's not what's happening right now, okay? And if you look at a weekly chart, of course my tags are going to be off, but look at this. This was an uptrend, right? You had higher highs and higher lows. But starting back here, this was the actual top in August on the close, right? Lower, low, lower, high, lower, low, so far lower, high. That is a textbook downtrend, okay? Let's talk about some altcoins, okay? Let's talk about, how about we talk about Ethereum? Saw somebody calling for $700 Ethereum yesterday, so let's take a look and do some rational analysis and say, is this plausible? And they're saying it was the season for it. Well, let's see. We have Ethereum has moved up. It has failed to break above its 200-day moving average so far, right? It's broke above some key levels, right? It broke above this 160, which sent it flying, right? Would have been a really awesome swing trade. I have no problem with him. I took trades on this. I said the other day if it broke through, I don't remember the level, I said 150 or something, that it might pump hard, and it did. So that's great. It was a super trade. But $700? I don't think so, right? We're below the 200 moving average. We're overbought on the daily, okay? Meaning we're already due for a retracement. And what do we have here? It dumped. It got to its golden zone for shorts, and it dumped, right? Pumped back up, got to its golden short zone, and then it dumped. Oh, look. By the way, I'm not trying to be like, arrogant and be like, oh, this is for sure going to happen. I'm just saying, like, it drives me up a wall because, like, let's just stay in reality, right? It's okay to be bullish if you want to be bullish, but base it on reality. Calling for $700 Ethereum right now is stupid. There's nothing in the chart that supports that, right? We're sitting in a short zone, okay? That's not where you want to be going long at. This is literally where institutional money looks for shorts, okay? Could it break through it? For sure. But that's what you want to wait for. You want to wait for confirmation that it's going to break through it. You want to wait for confirmation that it's going to bust through that 200-day moving average. And if it does, yeah, it might moonshot, okay? But reality is, right now, this is not a bullish looking chart. This is a bearish looking chart. Looks like a really nice bull rally in a bear market. It has failed to put in a higher high, right? It has failed to break its 200-day moving average, and right now it's sitting right inside the short zone. So, do with that information what you will. I would imagine if we start looking for divergences, we'll probably find them. 12-hour, yeah, it's got a divergence right here. You can see RSI making a lower high, price made a higher high, but it's trying to invalidate that in all fairness. So I wouldn't be trading that divergence. The 4-hour, on the other hand, definitely has some divergences. You can see it putting in higher highs. RSI has failed to put in a higher high, right? It looks pretty bearish. The hourly doesn't look too bad, right? So, I mean, I would watch it. I don't want to short this right now, but I definitely don't want to talk about $700 Ethereum. I think it's just ridiculous that people do that stuff, right? So that's kind of what I'm seeing on Ethereum. Let's get into the trading lessons, okay? Let's start with Dash. So Dash pumped up, I think it was like 300%, and a lot of people are probably wondering, how could I have caught that move on Dash? Well, guys, it was as obvious can be. In all fairness, right, I'm going to beat myself up on Zcash because I saw Zcash, even did a video about it and didn't take the trade. I didn't even see Dash. Wasn't even looking at the chart. So if you guys remember, if you've been watching the channel a while, you'll remember that I always talk about triple bullish divergence on the daily being a trade that I'm going to take 99 out of 100 times, right? Well, look at this. Here is price making a low. Here's price making a lower low, and yet another lower low. So that's the first part of our triple divergence. Down here we had RSI making a low, a higher low, and a higher low. There it is. There's my setup. Take that trade 99 out of 100 times, right? And even with Bitcoin doing what it was doing, I probably would have took this trade because triple divergence very rarely fails, okay? What happened after that? It put in a down, an up, a down, an up. What's that? That's a double bottom. You take that trade if you're conservative on the break of the neckline, right? If you took it on the neckline break, how much would you have made? Depending on when you sold, as much as 244%. Now, how would I take that trade? This is the way my trading plan works with alts, okay, on position trades. What I do is I'll enter a trade. So, for example, back here, I probably would have entered this one. Maybe I would have entered on the break. Probably not. I like to enter on the bottoms. But for argument's sake, we'll say that I entered on the break right here, okay? My first profit target is going to be double, okay? That's where I'm going to take profits in the first half. So let's say that I take this trade, and we're going to use easy math, right? Just nice round numbers. Let's say that I put $100 on this trade, okay? So how much could I have bought with $100? Let's see. If I bought on the breakout of the neck, we're just going to round it up and say it was $44.60 with fees. We'll say $45, right? We'll say that I could have bought $100 worth of Dash, $45 piece after fees. Could have bought 2.2 Dash. Okay, cool. When I got to 100%, I would have sold half. Why half? Because that would have paid me back for the position. That would have been $100 that I could have cashed out, and then I would have had a free position on Dash of 1.11 Dash. Okay. My next profit target would be another 100%. So when the thing went up another 100%, well, basically the 200% level is what I'm looking for, okay? So when I did this, right there would have been my next profit target. And what would have happened there is I would have sold half of that. So I would have sold half. And that half would have been sold for roughly $133. So I would have made about $65. So at that point in that trade, I would have made back my initial investment plus another $65, which on a $100 trade is a 65% profit. This last 0.55 Dash, what would I do with it? I would hold it either long term or until price got up here, right? In which case I would sell another half. Me personally, I probably wouldn't sell another half. I would probably just hold it long term. It's not a free position. I would have made 65% on the trade and no risk, at that point. It is what it is. I could just hold it for years and years and years and hope that Dash becomes the next Bitcoin or whatever. Okay. That's how my trading plan works on altcoins. That's how my position trades work. It's that simple. Now, your question might be, James, if you entered this, where would your stop loss have been? Okay, you ready for this? I wouldn't have had a stop loss. My stop loss would have been 0. Why? Because my profit target was double, right? So in a case like this, what I would do is I would put in no more than 5% of my trade fund. Typically, what I'm doing on these types of trades, I'm putting in like 1 or 2% of my trade fund. Okay, 1 or 2% is all I'm going to put into something like that. And then, if it goes to 0, no big deal. It's no different than losing 1% on a day trade. Okay, but then I don't have to watch it. I don't have to worry about it. I'm getting in at or near a bottom. Right, so even if it goes down 10, 20, 30%, if it eventually pumps 100%, I'm going to make money. So that's how the position trades work, right? So that's Dash. You had triple bullish divergence. You had a W on the daily. That was your reason to take that trade, okay? And you could have seen, hey, it's not a guessing game. It's not magic. It's not luck. That was pure, simple, technical analysis. On Zcash, I already talked about Zcash the other day, but let's talk about it again real quick. If you look at Zcash, it put in a W on the weekly, okay? That is a bottoming signal. You had down, your close was right here. You had up, that's your neckline. You had down, a higher close, and you had a break. That neckline was at 33 bucks. So if I entered on the break, by the way, there was also some divergences on the RSI. We're not going to talk about those. I just talked about that stuff. But if it broke that neckline and I entered a trade there, same deal. If I put in, 1% of my portfolio, I would have been taking profits on half right there, right? Didn't quite get there. So I wouldn't have taken profits, right? Maybe. I probably would have, right? Once it got toppy looking and put in some nasty divergences, I would have wanted to get out my initial. But the thing is I would have entered on that neckline anyway, because I'll show you. If we zoom in, and you guys already know this that watch the channel because I actually talked about this when it happened. But we had on the 3-day, bam, bam. We had a lower low on the 3-day, and we had RSI coming out of the oversold territory, putting in a much, much higher low on the 3-day. And this would have been my entry signal right here. Okay, if I wanted to wait, I could wait. And right there, oh, look at that. It's triple bullish divergence on a 3-day chart. So my entry would have been at 27.47 if I wasn't being a chicken shit from, being afraid Bitcoin was going to dump and run the party. Okay, so 27.47. Where did it go up to from there? It pumped up 137%, right? So I would have got out half, right around $54. I'd be in a free position right now, and I'd be up almost double, right? Somebody asked me to look at ETC. ETC was actually one of the coins that I have a couple different trading programs. One of them is focused on position trading, and that's actually run by a partner who that's mainly what he does. And this was actually one of the calls that he did a while back was Ethereum Classic. So let's do this real quick. Was there any, I haven't looked at this, so was there any signals on this? This is 2018. I don't see anything on the 3-day chart. Let's look at the weekly chart. I mean, there is a weekly W. Look at this. You see it? Pretty easy to see with the line chart, right? Down, up, down, up. So right there would have been a weekly W on that. Okay, I could see that argument to be made. So you'd enter at 394. It got all the way up to over $8. Again, more than double, right? Would have entered somewhere around mid-December, so doubled your money in less than a month. Okay, if we look at daily chart, let's put it on a candlestick chart again. Oh, look at this. Shocker. Here's your low, right? Here's your lower low. So they're not triple bullish divergence on this, but there is regular bullish divergence on a daily chart, right? And that was December 18th, December 17th. I bet you that's right when Bitcoin bottomed out, wasn't it? Yeah. So you had Bitcoin basically putting in a potential bottom at the same time that you have bullish divergence on this alt. Again, this was a total screw up on my part. I should have took these trades. I wasn't even looking for them. I was just so laser focused on Bitcoin. I didn't want to trade anything else, but it was stupid on my part. So yeah, this was a very obvious place that you could have entered that trade. You could have entered at right around $3.47, and it pumped 247% from there. So hopefully that helps you guys. Okay, hopefully it helps a lot. By the way, watch this. That's trend line going all the way back to September. So not only did you have bullish divergence, okay, you had a trend line that was basically 3 months old. You had Bitcoin looking like it might be bottoming out, at least on a local level, right? Yeah. It's going to be the stuff I look back in the future and use and say, okay, what did I do wrong? I never want to do that wrong again. This will definitely be stuff that I take and learn from, right? And look at this. You had the thing just putting in lower low after lower low after lower low, while RSI was putting in higher lows this whole time. You basically had 3 months of divergence, right? Pretty obvious trade to take if you're not, laser focused on Bitcoin and you're actually looking for it, and I was not. So that's how it works, though. Okay, the video is getting kind of long. I got a little bit more, I kind of roughed some people up a little more than I meant to in this video. So hopefully I can edit that stuff out. But it's not about pointing the finger at other people and saying, they're bad and I'm good. It's just about really trying to relay to you guys that, make sure when you're watching people, and hopefully you follow a lot more than just me. There's certainly a lot of really great people out there, but just make sure that you're asking, are they basing this on charts? Are they basing this on facts? Or are they basing this on what they want to happen? Because the reality is a lot of times they don't even realize they're doing it. I'm sure that I've done this myself, right? I'm sure that I've been so biased at times, bullish and bearish, where I've ignored, we don't have to look hard. Look, I ignored this. I didn't even look for it because I was so bearish. That's the kind of stuff I'm talking about. With all that being said, guys, I'm going to go ahead and wrap the video up here. Please remember, I am literally some guy sitting in a spare bedroom. Nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up. Also, don't forget to subscribe to the channel. Don't forget to check the description for links where you can follow me on TradingView, Twitter, and of course, join my free Facebook group. And one thing I wanted to point out, guys, if you ever notice there's ads in these videos and you're wondering why are there ads in these videos, why is he trying to make money off these videos? I'm not, okay? The ads, they make about $1 a day or $1.50 a day. The reason I put the ads in there is because YouTube's algorithm, okay? Think about this. If you're a company and you're recommending videos to your people on your website, are you going to recommend the videos where you don't make anything, or are you going to recommend the videos that have ads, right? I did that for reach. So I know it's a little bit annoying, and I wish there was a way around it, but over 50% of my traffic on these videos comes from YouTube recommending the videos, and I personally think that has a lot to do with the fact that they make money off of them because they're serving ads on them. So that's the reason for the ads. All that being said, this is James with Crypto Common Sense. Please remember to trade safe.